So what are the specific transactions for the conversion of capital asset into stock in trade? Capital assets brought in by the partner, distribution of capital assets, so distribution of capital assets on liquidation, compulsory acquisition, joint development agreement, buyback, liquidation, gift, so holding subsidiary transfers, mergers, demergers, conversion of debentures into shares, conversion of preference shares into equity shares, slump sale. So technically these things are there in the syllabus, but so only thing is that slump sale has even come some 3 attempts before also. Conversion of capital into stock in trade has come in the past examination. So others, gift has come in the past examination. So other than that, they have not come in the examination, but even though they are very, very important. So they are very special, specific transactions. So we have to understand why the section is introduced and what would be the reason for the same. So first, if you take the case of 45 subsection 2, the section will be attractive when a capital asset is converted into stock in trade and the capital gains arising on such conversion. If you recall, in the definition of transfer 247, clause 4, conversion of capital asset in stock in trade is not a transfer. The Badana that was introduced in assessment year 85-86, for which we gave one reason. So when your business started, so what will be the full value of consideration? So again, the reason, as I said, at the time when you start a business and take the capital asset and then subsequently sell, the sale will be taxed only as a business profit. However, the cost for the purpose of business income will be taken only as the fair market value on the date of conversion. So what has happened as a result of it is the difference between the fair market value and the cost was never taxed. So therefore 247 is specifically amended. Conversion of capital into stock in trade has been regarded as transfer. Second point. So once you regard as a transfer, when the actual consideration comes to you, only when the stock in trade is eventually sold to an outsider. Yeah, until such time the asset is only with me. My nomenclature alone was changed from capital asset to stock in trade. So therefore, I need a separate charging section, because if you go to 45 subsection 1, the capital gains becomes taxable in the year of transfer. இப்போ year of transfer when the capital asset is converted to stock in trade, that is why section 247 clause 4 says the transaction is a transfer. If I want to tax this in the year of transfer, the challenge for me will be in the year of transfer, I don't have the consideration payable to an outsider, correct? So it is a transfer by myself, within myself. I don't have a profit earned with an outsider. So if I go by 45.1, my problem will be there is no profit with an outsider is earned. So therefore what they have done is they just trying to define what is the consideration and to when it will be taxable. The fair market value and the rate of conversion will be taken as the full value of consideration. Capital gains will be taxable in the year of sale of stock in trade. That means both capital gains and business income, both will be taxable only in the same year. So just to is summarize and also take the issues. The final sale value minus fair market value will be the profits and gains from business occupation. The fair market value minus cost or indexed cost will be taken as short-term or long-term capital gains. Now, typically this, when we discuss transfer, at that point of time, we could have discussed this provision, but it is very difficult for you to solve this question in the examination correctly, because at that point of time when we started transfer, you don't know what is short term, long term. You don't know what is indexation. So therefore, even if I have to dilute the provisions and give it to you, or as an alternative, we should understand the full provisions and then come back. What are the issues here? Look at the indexation provision. Indexation provisions says indexation will be done on the basis of index of the year of transfer divided by index of the year of acquisition. Cost of acquisition to index of year of transfer divided by index of year of acquisition. Now, capital gains here is going to be taxable in the year of sale of stock in trade. But transfer is when you convert the capital into stock in trade. So normally what will happen, if year of transfer and year of taxability will be same. But what is going to happen in 45(2) is year of transfer and year of taxability are going to differ. At least in examination, 100% will differ. So I would have converted in 1819, but I would have sold in 1920. So that means the year of transfer is 1819, but year of taxability is 1920. If you have done few problems in capital gains, automatically your mind will coordinate that your index number numerator is 289. That's a typical normal process. 289 will be your working. Now you take this situation, what I've given, 1819 conversion, 1920 sale. Capital gains will arise only in the previous in 1920, but year of transfer is 1819. And indexation provisions explanation 3 specifies you are to index only up to the year of transfer. So what will happen as a result of it is you will not be indexing up to the current year of capital gains. Instead, you should do it only the year before that or year of conversion. Now, similarly, for short term or long term, so till what time you should take into account becomes a question. Now, since the transfer is completed on the date of conversion, you should take only up to the date of conversion. Now, again, you want to claim exemption to 54EC. 54 is available for a period of 6 months from the date of transfer. Now, date of transfer is date of conversion, right? So, assuming I convert on 1st of October 2018 and sell it on 1st June 2019, by that time my capital gains arises, my 6 months period will come to an end. So, therefore, the question which arises now, from which date the 6 months will be considered? For the purposes of claiming exemption under section 54EC, luckily we have a board circular. We had a board circular in 54 deposit scheme. The depositor dies, 743 circular, nobody is taxable. When the circular is given by the government, it's a lot more easier because circulars are binding on income tax officials. Here also they given a circular. Though 54EC says 6 months from the date of transfer, realizable consideration arises only when the stock in trade is sold. Therefore, you can take 6 months from the date of sale of stock in trade. That's the third bullet point at circular number 791. That in case of 45(2), 6 months period will be considered from the date of sale of stock in trade. So again, the last point which we already mentioned, though the capital gains are chargeable to tax in the year in which the stock in trade is sold, indexation will be done only with reference to the year of conversion, because year of conversion is your year of transfer. Taxability and year of transfer, once they are different, we have a very interesting challenge. So to quickly summarize, when a capital asset is converted into stock in trade, so the take for example here you have land purchased in 2001 for 10 lakhs, converted into stock in trade in 1819 when the fair market value is 150 lakhs. Stock in trade is sold in 1920 for 180 lakhs. So the first point is in financial year 1819, transfer is over because conversion of capital into stock in trade has been considered as a transfer by section 2 subsection 47. So therefore, in financial 1819, transfer is complete. But I can just for a moment think in 1819, with whom I made a profit? With nobody. There is no outsider to the transaction. So therefore, in 1819, though there is a transfer, I have not made a profit with an outsider. Therefore, what this section says, you pay the tax in the year in which stock in trade is sold. When stock in trade is sold? 1920. So in financial year 1920, you will have both capital gains as well as business income. But while calculation of capital gains will be done on the basis of difference between this and this will be capital gains. The difference between these two, that is 180 minus 150, so that will be considered as a business income. This minus this will be capital gains. But in capital gains, we need to bifurcate the capital gains into short term and long term. If it is a long term capital gains, you are eligible for indexation. That's where the question arises this problem. So typically, what most of us will do in the examination will index this 10 lakhs by multiplying by 289 divided by 100. But though the taxable year of capital gains is 1920, transfer is over in 1819. That means I should index only up to 1819. So that is the interesting part of the question. So we'll just try to go to the answer for this question. Computation of capital gains and business income, both will be in assessment in 2021. That's the most important point. The sale consideration minus fair market value will be taken as your business income. The fair market value minus indexed cost. So if you go to the equation again, the cost of acquisition is 10 lakhs. Index of 289 we have not used. We have used the earlier index, which is 280, 1819 index. By 100, it is 2001 to index 28. So LTCG 122, both PGPP and capital gains will be taxable in the year of sale of stock in trade. So very interesting provision. Backdrop by Srimbai K. Koka. Conversion of capital into stock in trade is not a transfer, no capital gains. People will start a business for a few days, transfer their land or jewelry or anything into stock in trade, will sell it off, no business income, no capital gains. So to prevent the misuse, 247 amended, 45 subsection 2 introduced, which provides for taxability of capital gains at the time of realization of the capital gains. So if you have any question on this, we'll step up the question. Konjam will do one slightly advanced problem. So if you have understood the basic concept, 45 as an experience in the intermediate level for having come in the examination a couple of times. So அதனால என்ன பண்றோம்னா ஃபர்ஸ்ட் இதுல இன்னொரு சம்ம போட்டு போயிடும் ஆக்சுவலா